What's up, guys, and thanks for tuning back into the Crypto Star YouTube channel, guys. If you enjoyed that live stream intro video, please drop a like, consider sharing, and definitely consider subscribing. All right, we're going to jump into the market here. We're going to work our way down. We're going to start with Legacy, but before we do, I do want to just show you guys the Solana chart. Some people are already asking about Solana in the chat. We can project lower levels. However, we're starting to see a little bit of bullish divergence, which is indicative of a potential local bottom. Doesn't necessarily have to mean that this is the bear market bottom or the trend bottom. This is going to be a reversal. However, previous reversals, right, we see price making lower lows. However, RSI on an uptrend right down here. Previously, we've seen with this little rally here in the middle of this trend, right? And this was no small rally. This was 84.84 directly into some resistance, directly into our 21-week simple moving average, which I'll show you guys in Crypto Stackers Pro in just a second, a retest of this resistance level 84 pump. But we saw the consolidation happen here where price was making lower lows, right, lower lows, but RSI was making higher lows, right? So we're starting to see that divergence, and we pumped off that trend before continuing further down. Now we're seeing a significantly lower lows, right? We made a low at 36.37, then we made a low as far down as 25, yet RSI is starting to move up. So we do have that divergence right ahead. We caught the divergence perfectly. It's right in line here with this local bottom, right where we started to see RSI start moving back up. Obviously what's happening right now is we've ran into this trend line resistance, right? This is just very simply trend line resistance. There are some margin pressure levels, sensor levels in here. We've got some horizontal supply resistance or support resistance levels that are structural, right? If we just draw a horizontal line, it's pretty obvious, right, that this was previous support resistance held as resistance, again, confluent resistance between our downtrend line and our previous support and resistance. We're getting a bit of a rejection. Now the question is, will we start to see, right? Will we start to see a higher low be put in, right, where are buyers going to come in? Buyers are eventually going to come in for Solana, right? They're going to come in. It's just a matter of, are they going to come in here? Are they going to come in here? Are we going to get a double bottom? Or are we going to see the market go lower? That is the question, right? I do think that in the grand scheme of things, let's go over to Crypto Stackers Pro, pull up our Solana chart, right, and we throw on the easy bands in the grand scheme of things. Solana at these prices, look at that again. We're getting resistance, not only all these other levels of resistance, these trend lines and whatnot, and support and resistance levels, but we also ran into our green easy band level, which we're using as resistance right now. We're using it as resistance. But it does tell us that Solana is oversold. It's oversold in relation to where it's been valued at for the last year and a half, almost 2 years now, right? I mean, what is it? It's June of 2022. If we go back 2 years, June of 2020, right? June of 2020, we were down here at around $4, right? But if we go back to June of 2021, right, June of 2021, we're around the same price. So we spent the entirety of the last year valued above what we're currently valued at right now, just kind of returned to this consolidation level. However, if you look at the last 21 weeks and the easy bands, all right, I'll show you this a 21-week simple moving average that we retested, that I had a mean reversion off of, right? We do see that we're undervalued, right? We're oversold. A mean reversion currently would bring us back up to this 80 region, maybe $70 region, to retest some of this previous support as future resistance. If we get a pump, you can also see that we are starting to put in on Solana, right, on the shorter term time frames. Let me clean this chart up just a little bit to show you guys this. We are potentially building a bump and run. We are potentially building a reverse head and shoulders. We'll have to see how it develops. If I get rid of this and I throw on this kind of more steep downtrend line, right, kind of seeing this shorter term downtrend, right, get broken. We broke through it, right, found some resistance, broke through it again, right, pumped up above it, ran into the longer term downtrend resistance. Right now, we're looking to find some support. We're looking to find some buyers at the same levels that we initially found buyers in off of our pump and our rejection from this downtrend line, right? We're starting to see the buyers come in, right? So it's a matter of how confident are these buyers and how much fear is there in the market right now. I think a lot of the fear, for the most part, is starting to subside, right? And a lot of that fear and emotional selling was sparked in the market, not necessarily right now. Our overall downtrend, yes, can be contributed to or attributed to rather this macro situation. But this deteriorating macro situation is what's causing the trend downwards, but what caused all of this selling right was a lot of forced selling and liquidations and fear of liquidations caused by Really Spark. By us, the collapse of Terra Luna and the contagion that spread into Celsius Networks spread into Three Arrows Capital. And that's what's causing a lot of the shorter term, right? If we didn't have ST, if we didn't have Terra Luna collapsing right, we'd still very likely be in a downtrend, but we'd probably be in this range right. But instead we've oversold, we've sold off due to it, and I don't think that's crazy to think. I really don't think that's crazy to think had Terra Luna not collapsed, had we not gotten all these liquidations from large funds like 3 Years Capital, had we not had Celsius Network had not had to shut down withdrawals and potentially be going insolvent, and that's just the tip of the iceberg. There's other stuff out there. There's BlockFi that's in trouble. There's other lending platforms that are in trouble, right? Had we not seen that, I don't think that we'd have actually broken these support levels, right? $70 for Solana. I mean, it's pretty reasonable. The other thing going on with Solana in particular that is driving price downwards is the explosion in NFT volume. And if we go to Crypto Slam, we see that for the last 30 days, NFT sales volume is down, but it's still pretty high overall in comparison to the rest of other blockchains, right? And what you're seeing is you'll see projects minting their NFTs on the Solana blockchain, right? So what's that doing? That's taking Solana, that's causing sell pressure on Solana, because while yes, some people do buy Solana, in order to mint NFTs, a lot of people already have some Solana. And they're just minting these NFTs with a Solana that they already own. And then, what are these new projects, doing immediately with that? The mint proceeds, right? They're selling it to us in order to secure funding for a bear market, right? So ye have an NFT project that may be raising 400,000 worth of Solana to through an NFT mint. And then they're turning around and selling half of that or 7 to 5 of that, which does cause sell pressure on Solana. I think because we're not in a particularly speculative market, right? The buying of Solana for NFTs is probably lower than the selling of Solana from the projects that are minting. That's at least my theory. All right, so that's Solana. We went ahead and covered Solana. Welcome to the chat, everyone. Sin City Crypto in the chat, guys. If you don't follow Sin City Crypto, they do daily live streams. They put out multiple live streams and videos per every single week. Their small channel, that their numbers do not reflect the quality of their channel. They have high production value, good insights on the market. Definitely go check out Sin City Crypto. I go on Sin City Crypto every Friday to do a little market update and technical analysis. I do think that they're going to be one of the larger channels, right? One of the larger, more successful channels in the next bull market, guys. YouTube, in terms of viewership within the crypto niche, has dried up, and that is a sign of a bear market, right? If you didn't realize from the price action that we're in a bear market, you could definitely go and look at a just general interest from other retail crowd on platforms like YouTube. Viewership is down for everybody, all right, but we're not going anywhere. We're going to continue to be in the crypto space, building in the crypto space, providing market insights, guys. If you're here, you're doing something right. Right, if you're still paying attention to crypto, when prices are down this much, you're doing something right. The where people make money is by being in crypto for the 6 months that Bitcoin is just grinding along at these super low levels, consolidating, and when they're paying attention here, and they realize like, hey, right, we've got some RSI divergence, or this is way oversold, or they're investing in altcoins or early projects, or even in NFTs, back in January of 2019, right? They are the people that are making the highest gains, right? The people that are sticking around and paying attention to the opportunities in crypto, paying attention to early DeFi in 2019, like, hey, what's actually being built right now, paying attention to these projects that are actually continuing to build in a bear market, right? So when the bull market comes back and up, making a lot of money, paying attention for this period of time, this was a very boring period of time for Bitcoin. Right, yeah. It was exciting when it rallied from 3,000 to 14,000. And then subsequently, it was just back into bear market accumulation mode even. With the spill off with the pandemic, right, most price action was between $6,000 and $12,000. This was just our bear market range, right? Bitcoin mostly went sideways for multiple years here, spent most of its time between $6,000 and $12,000 with one tiny deviation to the top side and two larger deviations to the downside. Very boring to be in crypto. Right here, very boring to be accumulating Bitcoin, very boring to be accumulating anything, especially altcoins, seemingly very risky to be accumulating altcoins. Right, however, it's actually not. It's the opposite. It's less risky to be accumulating good solid cryptocurrencies when we're down towards the bottom of these bear market ranges. Right now, we are towards the bottom of our range, right? We spent most or actually below, how where a lot of people would draw our last bull market's range, right? I would draw something like this price action for the last year and a half or so has spent a lot of time right between 30 and 60,000. Now, all of a sudden, we're trading at 20K, so we're actually below our range right now, potentially seeing a deviation below our range like we saw last bear market cycle, right? And this is a good opportunity, right? If we're seeing a deviation below this range, yes, this can be very, very painful. It could last 4 months, 5 months, 6 months. We could get a little V-shaped recovery and get back on track. That would be great, but chances are we may see, we haven't seen that V-shaped recovery like we saw in the pandemic quite yet. Global macro is still looking pretty rough. We could be down here for 6 months. Before we start popping back up to these ranges, right? Maybe in November, maybe in December, maybe around Christmas time. Right, maybe we spend 2 years down here, right? I don't think that's likely, but I would venture to bet that this is a deviation to the downside similar to what we saw the last bear market cycle. Let's go to DXY, remove a drawings here. Nothing too crazy to report on DXY other than we are continuing to challenge this longer term range, right? Zoom out a little bit, right? You can draw this range higher or lower, right? Goes all the way back to the 70s. We have put in higher highs, right? A higher high than these previous 2 highs, but we also have plenty of support down at this range, right? I wouldn't call this a breakout quite yet. I do think that we need to come back down. This is DXY. This is the strength of the dollar index, right? Just basically the strength of the dollar. I do think that we can go higher and see the dollar go higher, but it's very rare in the last however many years, 50 years, to actually spend significant time above this level, above 104. Right, we can see we did it in the dot-com bubble, right? 1999 to 2000 towards the end of the dot-com bubble, and we also did it in the early 80s. We spiked up and then what goes up must come down, right? We came down very, very rapidly, more rapidly than we spiked up, okay? So yes, DXY looks strong, but don't be surprised if we get a short-term correction before retesting this level again. Crude oil, I haven't looked at oil in a minute. I do think that oil is I don't believe that these prices are sustainable in the long term because supply will start to increase to bring prices back down. It's very, very profitable to be in oil, currently very profitable to be producing oil. Go outside and look at gas prices. Gas prices went from like $2 a gallon to $7+ per gallon, right? Oil companies are cleaning up right now. They want to ramp up production. It just takes a while to ramp up production, right, as oil prices start to drop over time. And I'm not saying that this is the top. We could certainly go higher, right? We go higher, but in the long term, given enough time, I think we'll start doing a bit of a mean reversion, coming back to these mid-levels, right? 70 to 100 up per barrel of crude oil, right? And again, I am not an oil expert, right? I'm just simply looking at the technical chart and trying to apply some very common sense, right? Oil production and supply, right, is much slower to react than demand, right? We see these massive spikes downwards, right, due to shocks in demand. Demand dropping very, very rapidly for gasoline, right, for crude oil, right, and demand can change very fast, but supply doesn't change nearly as fast now. We have had a bit of a supply shock with the Russia-Ukraine war, but in terms of increasing supply to meet demand, these things take time to ramp up. And we're starting to see those supplies ramp up, and I would expect some sort of a return to mean some sort of return to reasonable prices or more reasonable prices in the near future. It's only a matter of time before $7 gasoline starts affecting it's already affecting people's bank accounts, but in a way that makes them really conscious of how much oil is or how much gas they're demanding, right? How much they're driving SP 500, right? We'll keep this quick SP 500 overall. We've been in this long-term uptrend. I got some horrible trend lines drawn. Let me remove that. All right, so guys, draw a trend line up here, right? We'll draw a trend line here, and you could probably just draw a mid-trend line here, right? Nothing too fancy, just drawing a channel. We've returned to the mean of this channel, right? And we could correct here. We could adjust, and I did in the last live stream. I adjusted for M2 to money supply, and we saw that we kind of had a bit of a double top, right, or retest of all-time highs for the SPX or SP 500 legacy market adjusted for inflation, essentially adjusted for the money supply, and we're starting to move back down, and we're starting to see there's some potential levels of support. But at the end of the day, a lot of people classify recession as a 20 drop. We're currently sitting at a 20 drop. But if you look at just the trend lines, we're not quite there yet, like we're still in a macro uptrend, which is pretty scary in the sense that we could potentially drop much lower, right? We're not even to our levels, our pre-covered levels right now. I'm not saying we're going to get down to our pre-covet levels because there is more than twice the amount of money in the supply, all right, twice the amount of money has been printed up from a 20, whereas pre-covered levels I'm looking at like 2010 here, pre-covered levels. There we go, right there. I don't know what I'm doing. We haven't quite gotten down to pre-covered levels yet. We're close, right? We're close, but you have to also understand that there is twice the amount of money in the supply right now. There's some nuances to how fast that money's moving. There's nuances to interest rates, curbing demand. There's all sorts of conversations and variables at play, but you do have to take into account the fact that there is twice the amount of money in the supply as there was back pre-covered, and we're starting to see some sort of support in this range, right? Expect more support down here now. It is scary. I'm not saying that we're not going to go into a recession. We're not going to see lower levels, but we are still trending upwards. We're still trending upwards. Hopefully we see CPI and inflation come down, which would be good for risk assets. Now the question is this going to be one of these shorter-term corrections, right? Is this going to be a shorter-term correction, or is this going to be a recession? Is this going to be a multi-year ordeal where it takes us 3, 4, 5 years to come back to retest all-time highs, right? That's the question of GameStop and Netflix. Nothing too crazy here. I just like to keep my eyes on a couple of stocks in particular, guys. The Coinbase premium right now is minus 24. What is the Coinbase premium? The Coinbase premium is basically the price of Bitcoin on Coinbase in relation to a Binance or other major exchanges. Coinbase is an on-ramp for major institutional investors, and when Bitcoin's trading at a premium or a higher price than on other exchanges, that is usually bullish and indicative of whale accumulation or institutional accumulation right now. The Coinbase premium is actually negative by about 20 to 25, which would be considered bearish right now. The Coinbase premium isn't something that you're going to want to that's not you're going to be your number one main indicator of, but nonetheless, it's interesting. I'm actually going to move to this chart here, back to this chart, and I'm gonna clear this up a little bit, and I'm gonna zoom in on some shorter term time frames, right? Because I want to talk about what I think Bitcoin's potentially going to do in the short term. 4-hour chart here, we've got our sensor level tool that we've put on. Let me clean up some of this. We'll construct some ranges, maybe go back out to the daily, our sunset level tool, showing us our risk reward levels, right? We're already starting to see some support develop right on this sunset level at about 19.7K, which lines up perfectly with our previous all-time high, right? Coincidence? I don't think so. I think these levels, a lot of this happens for a reason. These levels line up in the long term based on support and resistance and risk reward levels in the markets. Right, we can even see our consolidation before this bull market really even kicked off, or as this bull market was kicking off when we moved from $10,000 to $20,000. We saw this pullback in this consolidation in between what is now our sunset levels, what are now our support and resistance levels based on risk reward to our top right, our all-time high, all the way back down to our bear market low. So I had our last cycle's low bear market low to our most recent cycle's bull market top risk reward levels. Off of that show that Bitcoin is getting us a 2-to-1 risk reward level, a risk to reward ratio, actually I believe 3-to-1. Let me double check that. Potential downside on this move would be minus 84% potential, or let me get a hard number right, $16,000, right? Potential upside on a move back to the all-time high would be about $50,000. So I believe that is actually the 3-to-1 risk to reward level. Okay, so you're getting 3-to-1 on your trade by buying at 20K. That's very important, right? 3-to-1 is an excellent risk to reward a ratio. So we're starting to see some support. The reason I am ready to buy 16.2 to 16.4K is because that is, I believe, our 4-to-1 risk to reward level. That's 4-to-1 risk to reward on our money, right? That is highly incentivizes buyers to start coming back in, right? So I do think buying the consolidation here at around 19 0.8 at our 3-to-1 risk-reward level is fine for a shorter-term trade. I do think we could get a bounce here, but I am waiting for a longer-term accumulation. Right, if I go over to Crypto Stackers Pro, go over to Bitcoin, throw on the easy bands, right, where would 16.2 hold on? Those are stuck on Solana. There we go. Where would 16.2 bring us? It would bring us down to slightly below, right, and depending on how long it takes at our green easy band level, which has historically been one of the best times to buy Bitcoin, and I won't actually be buying Bitcoin at this level. I'll be altcoin shopping at these levels. I'll be looking for Avalanche, Solana, Ethereum, solid layer 1 cryptocurrencies, in tandem with Bitcoin dropping to 16.2K. If we see that is the next support level, if we see a breach of this 20K level again, if we come back down and we see a breach of our previous wick down, expect support around 16.2 to $16.4 with tons of support levels. I'm not going to go through all of them. I'll maybe throw on one here. With our previous margin pressure levels, again 16.2K, that is the 1x short off of our last consolidation and local high. So another support level. There's more additional support levels in there that I'm not going to go over, but suffice it to say 16.2 to 16.4K is a strong support level. And guys, we are due for a relief rally. We have not had a proper Bitcoin relief rally in quite some time. The last kind of ABC correction that we had, which was around a 47 correction, was this correction from January to March of earlier this year. But recently it's just been significant drops, right, in forced selling and liquidations with periods of consolidation on our support levels, right, periods of consolidation on top of our bounces on our support levels, but no real relief rally, right? Even if you caught this wick perfectly, you're talking about a 28 move, but most of this was just consolidation. Most of this was just like a 12, 13, 14 consolidation area. Same thing we're getting down here, right? Yes, we had our wick, but where we're starting to see the channel develop is within a 10 to 11 range, right? So we are due for a macro like ABC correction. All right, something that would bring us back up to retest these levels of 30 to 34,000, right? And a lot of people are saying like, hey, it's going to go down to 10K, it's going to go down to 6K. Like, yeah, maybe if Celsius, if they can come in, if the whales can come in and liquidate Celsius, that's a risky game to play. There's a lot of money to be made for these whales to come in and try to liquidate Celsius at, I believe, 14,000. But there's also a lot of money to be made by defending Celsius's liquidation, other whales, right? So it's all just a game, right? Whales want to come in and liquidate Celsius at 14,000. Say right here, they want to push Bitcoin's price down below this level, force Celsius network or Celsius to sell their Bitcoin position, further driving price down to maybe $10,000, maybe $8,000, maybe even $6,000, so that they can take all the Bitcoin that they sold up here to drive price below 14K and turn around and buy it back up at this level. The problem with that is it's very risky, because if they do not succeed, they've sold off a bunch of Bitcoin to drive Bitcoin's price down, and then they have to cover their shorts, right? And you cause a squeeze back upwards, right? And you end up having to buy back in at either the same or higher price. Not only that, you're competing with other people that also want to buy this cheap Bitcoin. If Celsius capitulates, right? If Celsius liquidates, they're not, the whales are not the only ones that want to buy this cheap Bitcoin. So there is competition, but there's also a lot of money to be made by knowing that, hey, whales want to go and liquidate Celsius. I'm going to step it at 14,000. I'll let them drive it down to 15K. Then I'm going to step in and buy aggressively huge at 15K. Thanks for selling me all of your Bitcoin at 15,000, trying to drive this liquidation down. Meanwhile, Celsius may even come up with more capital and drive their liquidation point down to like $12,000, right? But another whale could easily step in and say, I'm gonna buy here at $15,000. Now you're gonna have to cover your short positions. You're gonna have to buy back a lot of your Bitcoin at higher prices. I'm gonna turn around and sell at $20,000 or $25,000, whatever price, right? So just because Celsius has a liquidation point at $14,000 on a large Bitcoin position, and there's incentive for whales to drive price down there to liquidate them, doesn't mean that they're going to. That doesn't doesn't mean it's going to happen. It's easier said than done, right? Yes, there's incentive for them to come in, but there's also incentive for people to defend, right? There's kind of layers to the game, the whale game. Can I look at helium? Sure, I can look at helium. I'm gonna get caught up with the chat here. Yeah, we'll look at Matic and helium. Let's first look at helium. I actually think helium is a really good bear market play, just in that they have a very unique use case, and you actually don't get exposure to their use case with being exposed to other like major layer ones like Solana, and so on a Solana Avalanche and an Ethereum, right? They're kind of their own network. They're a wireless infrastructure network, right? Focusing on long-range infrastructure as well as 5G infrastructure, creating a decentralized 5G network. They do have plenty of partnerships, guys. This is not telling people to invest in this project, but this is a potential gem. It's Hivemapper, right? It's being built on Solana, but it's essentially like STEPN, which is move to earn, except for you hook up a dash cam to your car and you provide data to this network so they can map out the world similar to Google Maps. So they're basically a decentralized version of Google Maps where you get paid to be one of the cameras on the road. Okay, normally this would probably be going off the charts in a bull market, but we're in a bear market. And this is the time where you can catch some of these smaller investments. And guys, I don't have a bag of, I believe the currency is called Honey. I don't even think it's launched yet. I have ordered a dash cam, though I'll just like, a lot of times getting in early on these things is very profitable. Getting in on stepping early allowed people to make a lot of money, right? But if we look in the team here, it's really solid backing. Multicoin Capital, Solana Ventures, Spark Capital, you get it. But if you look at their partners and advisors, a Helium Network is a partner, right? So just brought this up because we were talking about Helium Network. The founder, CEOs, and founder of Helium is an advisor on this project. So are the founders of Solana. So definitely check out Hivemapper. But all that to say is this is a real use case that Helium Network's going to be used for, same with 5G, that isn't nearly as speculative of the use case as some other stuff in the space like smart contract networks. So if we go back to Helium, we've recovered, right? We capitulated below the green easy band level. We've recovered and reclaimed this green easy band zone, solid accumulation zone. If you're looking to buy helium, I have no problem with people accumulating helium in this range. I do think it's a pretty solid diversification play. I think low caps in general are pretty risky, but helium is different enough that I think it could perform well while everything else is doing quite poorly. Obviously, there will be some correlation because it is a cryptocurrency. It is a small cap altcoin or mid cap altcoin, rank 46 now in terms of market cap, but overall shouldn't be as nearly as affected as some of these other smart contract networks are by a poor cryptocurrency market. Yes, so pretty bullish on Helium Network. Actually, I have a helium miner, but I don't have like a big bag of helium or anything. It earns a little bit of money, like minuscule amounts of money. But if we are to see further capitulation, I wouldn't mind picking up some helium. I'm just so focused right now on picking up Solana Avalanche and Ethereum. But if I had to pick another altcoin to be invested in, it'd probably be helium and Chainlink. Those are the two kind of infrastructure plays that I think are going to be big in future bull markets, and actually add diversification to a portfolio. Here's the problem with other stuff like Matic, right? We'll go over Matic because somebody asked about Polygon. Polygon does not die. It adds additional risk to your portfolio, and I like Polygon. I think it's going to be very successful, right? I think it's going to perform well from a token price perspective in the future, right? Future bull markets, I do think it could see like a ridiculous drawdown similar to what we saw with Cardano last market cycle. It's a useful cryptocurrency. A lot of stuff is building on Polygon, right? But it did go through a crazy run up. But the problem is it doesn't give you a ton of diversification in your portfolio if you already own Ethereum, right? If you own Ethereum, you're taking on additional risk, right? An additional tokenomic system, right? And at the end of the day, it's going to be tied or correlated with Ethereum because it's a layer 2 scalability solution built on top of Ethereum. So if you own Ethereum, your risk is that the merge does not go off successfully. Ethereum, fails to continue to build and scale, or Ethereum gets hacked in some way, right? Those are kind of your risks. Right at Ethereum has very solid tokenomics, right? But then if you buy Polygon, you're introducing it, you're still exposed to all of those same risks that you're exposed to with Ethereum because Polygon is built on Ethereum, right? If the merge is not successful, or is perpetually delayed, or something else goes wrong with Ethereum polygons, token price is going to suffer, as well it's also going to suffer, right? But you also have the risk of right what if Polygon hits hacked, right if Polygon gets hacked. Ethereum's token price is probably fine, right? It may have some effect on Ethereum's token price but you just have this whole other layer of risk. What if something happens with the Polygon team? What if there's funds being laundered or something, right? Polygon's pretty solid, right? I don't expect that to happen, but we're living in a world where we just saw Terra Luna, a top 10 cryptocurrency, completely collapsed, so you're just introducing additional risk at the moment in a bear market with very little additional upside, because we're not seeing speculation now. In a bull market, the gains are like it's good to be in Polygon because the upside's higher because speculation is super high, right? And yes, it's correlated to Ethereum, but it's got a higher beta, right? It's higher risk, higher returns, right? But in a bear market, it's higher risk without the potential higher returns at the moment, right? Because we are trending downwards. If we see this ship turn around, we go back into a bull market, yeah, all day Polygon great, but I just don't feel like I need the exposure in my portfolio because it's just too correlated right now to Ethereum, and I think Ethereum's going to hold up stronger with its tokenomics, right? That's where we get into kind of the debate here, where I think Chainlink and Helium Network are pretty solid additions to a portfolio because their infrastructure plays, because they're different, because they have competitive advantages and head starts on some other players on the market, right? If you look at Near Protocol is another layer one solution, very, very solid technology. I believe in Near Protocol and think it LL do well long term. However, it's competing in a space with Solana, Avalanche, Ethereum. It's going to be correlated with the overall layer 1 market. So if I have Solana, Avalanche, and Ethereum in my portfolio, I don't feel like I need more exposure, more correlation to this layer 1 smart contract network theme, right? I think 3 players picking 3 cryptocurrencies, a 3 layer ones, is plenty of exposure for my portfolio now. You could pick a different 3, right? You might pick Ethereum, AVAX in your protocol and leave Solana out. That's fine, like that's fine. But I think when you start getting like 5, 6, 7, 8 layer ones in your portfolio, especially in a bear market, just kind of over diversifying a little bit and opening yourself up to more risk than you really need to. Okay, so that was Matic. Obviously, you guys can see Near Protocol right now, it's oversold. I think it's a very solid, fundamentally very solid from a technology perspective. What are my thoughts on RMRK? I haven't done a deep enough dive on RMRK to understand type it in and see if we have data for it. But usually the problem with a lot of these low cap cryptocurrencies is they have really bad tokenomics, right? There's very few projects that have good tokenomics on both the supply side and the demand side. Demand is the demand side like is getting crushed right now, right? Yeah, I mean, this doesn't look good. $63 all the way down to $342. I mean, it's pretty beat up. Circulating supply versus total supply is pretty nice. This is fully distributed, basically fully diluted valuations, $34 million. Yeah, I mean, I think this is like an NFT play, metaverse play. Yeah, I mean, if you want to speculate, not financial advice, I would keep it small. I would not be speculating with large amounts of my portfolio, because for every dollar that you speculate on something that could potentially just continue to go to zero or go out of business, that's a dollar that you're not using to take a more concentrated high probability bet on. Stuff like Ethereum, Solana, AVAX, right? There's opportunity cost. Like right now, I truly believe that in the long term, or given a long enough time frame, Ethereum can 10x, right? Can go to $11,000. Don't think that's crazy. Not like with if the merge goes off successfully with its supply side token. Almost, I do not think that 1,011K is out of the question for Ethereum. In fact, I think it's very likely given a long enough time frame. Whether that time frame is 2 years, 6 months, 5 years, 10 years, I'm not sure. I don't know how long it'll take, but I do think that Ethereum can get to $10,000, $11,000, right? So for every dollar I don't put in Ethereum, I'm sacrificing in my mind, because I believe Ethereum is going to do a 10x. I'm sacrificing a 10x. So I'm sacrificing a high probability of a 10x, right, to invest in something that would be, I'd be thrilled if it 10x. I don't know that it's likely that it was 10x. Maybe it bounces back and maybe it does a 20, 30, 40x. or maybe it goes to zero, right? I think it's just people are searching for like lottery tickets when there's really, really solid bets right in front of them, like really, really solid. Like there's a reason Ethereum is this #2 cryptocurrency by market cap, like it's really, really solid technology, right? People want to get caught up in like scalability and gas fees, all they want, but people at the end of the day, people are using Ethereum, right? They have a roadmap moving forward that will address some of those scalability issues, right? But they have the market share right now, and they have the market share for a reason, right? Avalanche, super, super solid technology. I believe it's going to bounce back, right? And because I believe it's going to bounce back to all-time highs, right? Every dollar that I don't invest in Avalanche, right, when it's down at 17, and I believe that it's realistically going to go back up to all-time highs and push to 170, right? Every dollar I don't spend on AVAX down here is I feel like in my brain, given a long enough time frame, I'm sacrificing a 10x. Like why would I speculate on lottery tickets when I feel like I have really, really solid 10x opportunities in Ethereum, Avalanche, and Solana, right? And maybe out then the reason for diversifying across three, maybe Avalanche ends up taking the lead, maybe it's all AVAX next market cycle and Solana goes bye-bye and Ethereum goes bye-bye, but I have a 10-15x in an Avalanche and maybe break even or slight loss if things really, really go wrong on Solana, Ethereum, or maybe it's just a 2 or 3x at Solana and Ethereum and a 15x on Avalanche. That's why you diversify, right? For other people, it might be Cardano, right? Your picks might be Ethereum, Cardano, Solana, or Polkad, Cardano, Ethereum. Whatever your 3 layer 1 solutions are an I-know layer 0 or whatever, but it's essentially for all practical purposes, right? So that's why I'm just not so big on speculating on low caps right now, and the only reason I bring up Helium Network and Chainlink is because they actually add some diversification, like unique use cases that aren't just layer 1 solution, right? And I've talked about why I don't want anything that's layer 2, and I don't want dApps right now, right? Like I don't want it to expose myself to AV, right? Because it's correlated to Ethereum. Like if Ethereum does poorly, AV is going to do poorly, it's going to do worse. More than likely, if Ethereum does well, like yeah, Havale do well. But there's also additional risk with AV. Okay, let's get into the chat here, see what people are looking. Cosmos, yeah, we can look at Cosmos, very, very solid. A look at Atom, we'll look at people love Algorand. Yeah, guys, I mean at the end of the day, like all of those are solid play, like Algorand's a solid blockchain. But where's all the where is everybody building right now? Everyone's building on Ethereum, Solana, Avalanche, and really has a lot of developers as well. Let's see here, we can try to mess around and project a bottom maybe somewhere around there. Yeah, I mean we're looking at some support around 22 cents if we do go further down. Let me pull up Algorand here in Crypto Stackers Pro. Get rid of that. There we go. Throw on the easy bands. Just like everything else, massive downtrend, pretty oversold, approaching some support at potentially 22 cents. Guys, if you're really bullish on Algorand and you believe it's going to bounce back to all-time highs, I don't think there's anything wrong with accumulating it starting in this oversold zone of $1.10, but you have to be willing to buy it all the way down. Like if you just accumulated with everything you had at $1, right, your entry points pretty high and you're down 70, right? And this is why in a bear market, I just don't want to be in these lower caps, right? Because even they can just grind down their green easy bands, which is fine, but we have to be willing to buy down our positions, right? And have conviction that it's going to bounce back. If you believe that Algorand is going to bounce back to all-time highs, right? And make new all-time highs and go to $7, right? That initial entry point at 90 cents to $1 is getting a 789x, right? And the entry points and accumulations that you're making right now is potentially 10 to 20x, right? I just personally feel like Algorand is not seeing the level of adoption that these other layer 1s are. So for every dollar that's onboarded into the crypto ecosystem, most of those, and I mean D5 is just one use case of a layer 1 network, but we can see that reflected in total value locked in D5, right? So we're seeing Ethereum, Avalanche, Solana, right? We have Binance Smart Chain, and Tron. Tron is just like this, like most of that's just Justin Sun's a net worth in Tron, propped up artificially. Finance Smart Chain, Binance BNB token has, or BNB coin has very solid supply side tokenomics and pretty solid demand side tokenomics with their exchange, right? But I don't love it long term. I think long term it loses market share to more innovative, more decentralized stuff, right? So those are why I don't love those two. I also think like Avalanche and Solana have competitive advantages when it comes to blockchain, gaming, and NFTs. Okay, what was the other one? We wanted to look at Cosmos or Atom. Let's go in trading. I got it in here somewhere. If I can find it, Atom, there we go. $7.25 for move drawings. Looks like we retested the 50 on the RSI, got rejected. Let's mess around with our support resistance tool here. Let's see, right, if we line this up, we could potentially be seeing some sort of a bottom around 4.66, which is pretty in line with our previous resistance in previous support zone, right? So if you're looking for a bear market pickup on Cosmos, 4.66 is a pretty solid price level to buy. This is our support moving into the bull market, our resistance moving into our bearish crash here. Let's go to crypto stackers. Probe look at Cosmos there on the S bands. Yeah, super oversold. It's below the green easy bands, guys. A lot of low cap stuff is just has gone way below and become very oversold. This is due, like I said, right, we are in a bear market. If we did not have Terra Luna, right, if we did not have Terra Luna collapsing, death spiraling, and if we did not have that contagion spreading around in Celsius network, potentially becoming insolvent, freezing withdrawals, you know what's been going on, like all this negative stuff, Three Arrows Capital going out of business, right, liquidating, right, we would probably be chopping and accumulating in this green easy band level around $13 to $16. But this forced selling is artificially pushing the market down to oversold levels that it really does not belong at, right? Yes, global macro looks bad, but even with the global macro situation and bear market pushing this trend downwards, like we would be at higher levels, it's this forced selling that is artificially pushing and forcing this market to deviate down to the downside. If we go back over to Bitcoin, all right, this is what I was talking about, right? We have our range, right? And this is why, because we're seeing this for selling. I don't care how bad global macro looks, we're having for this for selling. I believe that this is a deviation from our range, similar to what we saw last bear market cycle, similar to what we saw twice. Right now, we're seeing a deviation from our range. Most of the price action belongs up in this range. If it weren't for Terra Luna collapsing and all this forced liquidations, and for selling, Bitcoin would probably be sitting at 28 to 30K support. Let's be honest, it'd probably be about 33% higher price than where it's at right now, right at trading in this range, and it would probably be a good accumulation zone before moving back up to retest some of these mid-levels. But instead, we've got this contagion going on with the collapse of Terra Luna that is liquidating and forcing a lot of sellers, a lot of panic, selling, a lot of emotional selling that I believe is going to manifest as just a simple deviation from our range before we recover, right? That's what I think is going to happen. I don't know if it's going to take 6 months, 12 months, 20 months. I don't know if we're going to go down to 10K or not. It's possible if they liquidate Celsius, but I don't think it's likely that they're going to liquidate Celsius. I think it's too risky, right, especially at these levels. Do you think there's strong chance we move to 16.2K? That's where I'll be buying, right? And then start to accumulate and recover back up to these 28K levels, 30K levels, bottom of our range, if not just testing the bottom of this range is resistance before potentially moving back downwards. Pretty messy there. Do I think it's a good idea to invest in NFTs in the bear market, certain NFTs blue chips, and anything that pays you revenue share or pays you like the other solid investments that I think, or another cryptocurrency or another low cap that I think is solid because of its tokenomic structure is looks rare, right? This is a NFT, like you can get exposure to the NFT market. This way is you really don't need to invest in NFTs in a bear market, like to get exposure to the NFT narrative. Why? Because you're going to get exposure to NFTs through owning Solana, through owning Avalanche, even though NFTs aren't very big yet on Avalanche and Ethereum. Like if you own Ethereum and Solana, you are getting exposure to the NFT space as a whole, right? Looks rare is going to give you deeper level exposure to NFT space. It is going to bring on additional risk because it is one exchange, one decentralized NFT exchange, all right. So the NFT market could do really well, but looks rare could collapse if they get hacked or they have some sort of exploit. However, I like stuff that pays you rev share, right? They pay a portion of their fees out to Look Square stakers, and they pay in the form of Ethereum. Might earn 10 staking, but the token meanwhile has gone down in value 20, so you've actually lost money, all right. So I do think there's some solid NFTs to potentially be investing in a bear market. Anything that pays you ref share in a native token pays you to hold it. Obviously anything that's blue chip, if it capitulates really low, so like Bored Apes, I already talked about. I already said, like, I came out with a thread and a video of what my bear market watch list was. I didn't buy a Bored Ape. I'm not interested in buying a Bored Ape, but I was like, you're gonna be able to get a Bored Ape more than than likely for $80,000. It's already dropped down to 86K of this bear market's not over yet. We could see Bored Apes below 80K. I think they're a fine investment at 80,000. I'm not a big fan after all the drama came out about like the Nazi stuff and affiliations, so I personally think that's too risky to be spending $80,000 on a Bored Ape, especially when those allegations are floating around whether you believe them or not. I think that can potentially massively damage a brand, especially in today's cancel culture, the time like the times we're in right now, where cancel culture is so popular. CryptoPunks, blue chip Moonbirds, pretty solid blue chip, not a huge fan, but where I think most of the opportunities are going to be is in generative art. The two projects I'm watching are Fidenza and Crummy Squiggles. If they drop down to like $3,000, I'd be wanting to pick one or two up, and a Fidenza, if it dropped down below like $50,000, I'd consider picking one up if I was financially prepared to outlay $50,000, which to be honest right now, I don't think I would be, because $50,000, like you can't get a 10x. Like if you look at a let me refresh this because I think the price floor is not showing up correctly. Fidenza, interesting. Fidenzas were definitely 30 days. It looks like we've potentially lost some data. Fidenzas sold as high as $1 million, right? So if they go back to 500,000 and you pick one up at 50,000, you're getting a 10x. You're going to need a 10x. However, it's going to be much less liquid and it's going to require the market bouncing back. The NFT's generative art market bouncing back, and $50,000 is a huge outland. Much rather take a more conservative approach, given my financial situation, to accumulating Avalanche, Solana, and Ethereum. But I do think that Fidenzas are going to be worth quite a bit moving forward. Fidenzas, Crummy Squiggles, and probably maybe even CryptoPunks. But CryptoPunks also are owned by Yuga Labs now, so I don't love being exposed to CryptoPunks. The One Punks kind of a different story. Yes, they're owned by Hugo Labs. However, they're kind of more in the historic NFT space. So yeah, I'd be looking at historic NFTs or blue chip generative art at steep discounts, like 90+% discounts, really like 95+ discounts. That's what I'd want. Yeah, LooksRare has a big token unlock. But you have to understand like the luxury token is currently, I believe, trading at below or like at what VCs paid for it. So VCs are like break even or like slightly underwater on their investment. So they're not nearly as incentivized to sell off their tokens at these cheap prices. Yeah, definitely some risk there, but they're also paying you Ethereum. All right, also paying you Ethereum, and I like that a lot. Again, too low cap for me to speculate, right? I've got my I'm not saying buy LooksRare. I think it's a really solid token, really solid project and product. I'm getting my NFT exposure through stuff that I've already bought and accumulated some positions. I've got some V1 punks among other things, and Solana, Avax, Ethereum. That's my NFT exposure. Like that's the beauty of owning like a couple of big layer ones. You're gonna get your DeFi exposure, you're gonna get your NFT exposure, going to get all your blockchain gaming exposure through these cryptocurrencies where that stuff is being built, and you don't have nearly as much risk as one single blockchain gaming project or one single NFT exchange failing and being exposed to their tokenomics, especially in a bear market. That's why I'm a big fan of consolidating into large caps right now that you expect to bounce back. Jonathan's asking, is allocation to blue chips still a good thing in a bear market, or just keep designing into good mid-small cap projects with great fundamentals? As I just mentioned, a bigger fan of investing or consolidating into blue chips. Stuff like Ethereum, Avalanche, Solana. You can make a case for stuff like Cardano. You can make a case for stuff like Cosmos, right? Just because I'm not invested in Cosmos doesn't mean I don't like it. Like I think it's fantastic technology. Polygon chain link right near protocol. Skip Uniswap. No reason in my opinion to be investing in Uniswap because it's a protocol token on top of Ethereum. Like you're just niching down into D5, taking on all this additional risk. Whereas if DeFi explodes again, Ethereum's going to benefit. Algorand Solid again doesn't have as much TVL or adoption as I would like. Cosmos, I'd stay away from stuff like Flow and Apecoin. Yeah, and then we start getting into more speculative stuff, which is fine. I would just keep the allocations lower. There's nothing wrong with speculating right now at these really low prices on stuff like Helium Helium, really solid fundamentals, good diversification play, really unique wireless infrastructure, use case oversold currently, right? Nothing wrong with diversifying into Helium network at these prices. However, just keep in mind, right, it's a lower cap project, there's additional risk. I would personally keep this allocation a little bit smaller, right? Rather than, having it be 30% of my portfolio, maybe I have it 3 to 5% of my portfolio. Hopefully that makes sense, guys. If you want access to CryptoStackers.pro and all these tools that we've been using today, check out the link in the description below. It's CryptoStackers.pro, help you make better crypto decisions. Right at the end of the day, investing is just a series of decision making, right? You make better decisions, right? And you cut out the bad decisions, you're going to have a more successful investing journey in crypto. So that's what Crypto Stackers Pro is designed to do through some technical analysis tools that make technical analysis and crypto analysis easier, simpler, and fast to do, to find these support and resistance levels ahead of time so that we can tailor our strategies to be as successful as possible and make the best decisions possible. As it's $19 a month. There's also a lifetime subscription, which I'm not going to show is more expensive. It's like $1,500, but you also get access to all the trading view indicators, you access to the Discord, you also get access to the Nano Revenue Share program, which pays out 10 of our revenue each month to lifetime subscribers. But if you just want to try this out, it's $19 a month. You can always cancel later on at any time, guys. Appreciate everybody tuning in. If you haven't yet, please do like, comment, and subscribe. Really helps the channel grow. And if you want to check out Disco Kitties, it's at disco.fm. You can go whitelist, right? You can get whitelisted by creating a custom Disco Kitty, and this is going to be listen to earn. We're gonna be building listen to earn, where you can listen to music to earn money, right? Earn Solana tokens. With that, I'm gonna end the live stream.